Welcome to the deep dive. Today we're diving into precious metals IRAs.
Hmm.
You've probably heard whispers about them, maybe seen some ads, and we're here to give you a clearer picture of what they are and, well, why they might be something to consider for your retirement security.
That's right. And we've got a really insightful resource guiding us today. It's the Best Precious Metals IRA Companies 2025 guide by Doug Young.
Doug Young, remind me.
Yeah, he's got over 20 years under his belt, financial investing, commodity trading, precious metals. So he knows his stuff. And this guide, it's great because it actually compares and reviews a lot of the companies in this space.
Okay, good source. So you hear precious metals IRA. What does that actually mean? Break it down for us.
Okay, at its core, it's a self-directed IRA, an individual retirement account. But the key difference, the big one, is that it lets you invest in physical precious metals.
Physical, like actual gold bar.
Yeah, like gold, silver, platinum, palladium, real tangible metal, all while keeping those tax advantages you get with a traditional IRA.
So instead of just paper assets, stocks, bonds, you're holding actual metal.
Exactly. That's
Yeah.
the fundamental distinction. Tangible.
Tangible assets. That definitely adds a different feel to retirement planning. So what we want to do for everyone listening is provide a really clear understanding of these precious metals IRAs.
Right.
We'll dig into why they might be appealing, things like diversification, maybe hedging against inflation. We hear those terms a lot. And we'll walk through the steps, how you actually set one up, and point out the important things to look for when you're choosing a company to work with.
Yeah, the provider is key.
The goal is really just to give you the essential info, the need-to-know stuff, without, burying you in jargon.
Exactly. So let's jump right in. The big question.
Yeah.
Why even think about putting precious metals in your retirement plan?
That's the crucial starting point, isn't it? Doug Young's guide really hammers home the role of precious metals, gold and silver, especially as assets that can offer, well, stability.
Stability. How so?
He highlights that they often don't move in perfect sync with traditional stocks and bonds. The guide mentions times like economic downturns, where metals have sometimes held steady or even gone up when other markets were falling.
Right. That inverse correlation idea.
Yet that's the diversification benefit right there in action.
That's such a key point. And think about broader economic worries or inflation eating away at purchasing power. Historically, precious metals have often been seen as a kind of safe haven.
A safe harbor, yeah.
Their value isn't directly tied to a company's earnings report or, the overall GDP in the same way stocks are. So they can act as that hedge, potentially protecting your wealth when things get rocky.
And the IRA wrapper just lets you do that within a tax-advantaged account.
Exactly. You get the physical security plus the tax benefits.
Okay, so the rationale is there. It sounds compelling. But how do you actually do it? Setting one up feels like it might be more involved than, say, opening a regular IRA online.
It is a bit different, you're right. There are specific steps. First off, you need to open a self-directed IRA account. That's crucial.
Self-directed, why that specific type?
Because not all IRA custodians allow you to hold alternative assets like physical metals. Most standard brokerage IRAs are limited to stocks, bonds, mutual funds. You need a provider, a custodian, that specializes in self-directed IRAs that permit precious metals.
Okay. A specialist. Got it. And then what? You just, buy some gold coins.
Well, merely. First, you have to fund the account. Usually that happens one of two ways. Either a transfer from an existing IRA.
Like moving money from one IRA to another.
Exactly. IRA to IRA.
Yeah.
Or a rollover from a different type of retirement plan, like a 401k or a 403b.
Okay, transfer versus rollover. Is one better than the other?
It depends on where the money's coming from. The guide points out that a good provider will really help you navigate this. They should make the transfer or rollover process pretty smooth, handle the paperwork, talk to your old custodian if needed. Hassle-free is the goal.
Okay, makes sense. So the money's in the new self-directed account. Now we get to the metals, the tangible part. What kind can you actually hold? Is it any old gold jewelry?
No, definitely not jewelry. The IRS is very specific here. You can't just stash any gold thing in your IRA. The metals have to meet strict purity standards. They need to be investment-grade bullion.
Okay, purity standards, like...
Generally, for gold, that's got to be 99.5% pure. Silver needs to be 99.9% pure. And platinum and palladium, typically 99.95% pure.
Wow, specific.
Very. And Doug Young's guide also mentions specific coins the IRS approves, like American Gold Eagles, Canadian Maple Leafs. Those are common choices. Your provider, the company you choose, they should guide you on selecting metals that meet these IRS requirements. That's part of their job.
To make sure it actually qualifies for the IRA.
Precisely.
And I'm guessing you don't just like keep these bars or coins in a safe under your bed.
Definitely not. That's a big IRS rule. The physical metals held in your precious metals IRA must be stored securely in an IRS-approved depository.
A depository, like Fort Knox.
Well, maybe not Fort Knox itself, but specialized high-security facilities. They provide the security, the insurance, that tracking the whole chain of custody the IRS requires for your metals.
Right. Okay. That makes sense. Security regulations, checks out. Now, what about adding more money later? Can you contribute each year like a normal IRA?
Yes, absolutely. The contribution rules are the same as for standard IRAs. For 2024 and 2025, the annual limit is $7,000.
Or $8,000 if you're 50 or older, right? The catch-up contribution.
Exactly, $8,000 catch-up. But remember, that limit applies across all your IRA accounts combined. So if you have a traditional IRA and a Roth IRA and a precious metals IRA, your total contribution to all of them can't exceed that $7,000 or $8,000 limit.
Good point. Total limit. Now, Doug Young's guide also mentioned something about timing your purchases. That sounds tricky with physical stuff. It's not like buying a stock instantly online.
It can be, yeah. I mean, perfectly timing any market is basically impossible, right?
Right.
But the guide suggests talking with your provider. They're in the market daily. They see the flows. They might have insights that can help you make more informed decisions about when to buy your metals. It's part of the service you should expect.
Okay. Let's shift gears to taxes. That's a huge reason people use IRAs in the first place. How do the tax advantages work for these precious metals IRAs? Pretty much the same.
Pretty much the same, yes. Very similar to traditional IRAs. If you go with a traditional precious metals IRA, your contributions might be tax deductible in the year you make them. That could lower your current tax bill.
Nice.
And then, crucially, any growth in the value of your metals inside the IRA, that's tax deferred. You don't pay taxes on the gains year after year. You only pay income tax when you take the money out in retirement.
Standard traditional IRA treatment. But the guide mentioned a Roth option, too.
Yes. Just like regular IRAs, there's usually a Roth precious metals IRA option available.
How does that work?
With a Roth, you contribute money you've already paid taxes on, so after-tax dollars. There's no upfront tax deduction like the traditional.
Ah, okay, so what's the benefit then?
The big benefit comes later. When you take qualified withdrawals in retirement, say after age 59 and a half, and the account's been open 5 years, those withdrawals are completely tax-free.
Tax-free growth and tax-free withdrawals.
Exactly. That can be really attractive if you think you might be in a higher tax bracket when you retire than you are now. Pay the taxes now at potentially lower rates.
Okay. So you've got the choice, traditional or Roth, just like with standard IRAs. Now, fast forward. You're retired. You need the money. How easy is it to actually get the value out of those physical metals? It's not like clicking sell on a stock.
That's a fair question. It's a bit different. The guide explains you generally have two main options. Option one, you can sell the precious metals held in your IRA.
The provider helps with that.
Typically, yes. They'll facilitate the sale, and the cash proceeds are then distributed to you. Option two, you can usually take physical possession of the actual metals themselves.
Ooh, interesting. Take the gold home.
You can, but you need to be careful there. Taking physical possession is a distribution. It could trigger taxes, depending on the account type, and you lose the IRA protection. Also, selling might take a little time, for the transaction to settle. It's not instantaneous.
And the usual early withdrawal penalties apply too, right? Before 59 and a half.
Oh, absolutely. Pull money out early, before age 59 and a half, and you're likely looking at income tax, plus a hefty 10% penalty, just like any other IRA. So these are definitely meant for long-term retirement savings.
Right. Okay, so it seems like this whole process, setup, funding, buying, storing, eventually selling, really relies heavily on the company you choose. Doug Young's guide really stresses this point, doesn't it? Why is picking the right provider so critical here?
It's absolutely paramount. Like the guide says, you're not just picking someone to handle a transaction. You're choosing a partner, really, for a big piece of your financial future.
A long-term partner.
Yeah. They guide you through that initial, sometimes complex setup. They help you choose the right kind of IRS-approved metals. They arrange the secure storage in those depositories. They provide ongoing support, account statements, help with distributions later.
So you need someone trustworthy.
Trustworthy, knowledgeable specifically about precious metals IRAs, and frankly, someone who puts your interest first. It's a big decision.
So based on the guide, what are the absolute key things people should look for when they're comparing different precious metals IRA companies?
The guide lays out several must-haves. First, obviously, is their expertise and track record, specifically with these types of IRAs. You want specialists.
Not just a side business for them.
Exactly. Then look for top ratings. Check the Better Business Bureau, the BDB. Check the Business Consumer Alliance, BCA. Look at sites like TrustLink. Are they getting A-plus ratings? AAA ratings.
What about customer reviews?
Hugely important. What are actual customers saying? Look for consistently positive feedback, a strong reputation. And related to that, quality customer service. Are they responsive? Helpful? Do they educate you or just try to sell you something?
Education is big.
Very big. A good provider should offer solid educational resources. They should also demonstrate a commitment to compliance, following all the IRS rules. Transparency is key too, especially around fees.
Fees. Always watch the fees.
Always. You want a clear fee structure, no hidden costs that pop up later. And finally, secure, insured storage options. You need to know your metals are safe.
The guy also mentioned some red flags, right? Things to watch out for.
It does. Big red flags include high-pressure sales tactics. Anyone promising guaranteed huge returns, run away.
Yeah, no guarantees in investing.
Exactly. Also, be wary of companies that aren't upfront about their pricing or their fee structure seems really confusing. And definitely be cautious if a provider is pushing you hard towards specific coins, maybe numismatics or collectibles, which might have higher markups, without really understanding your goals first.
So trust your gut.
Absolutely. The guide basically says if it feels off, if it seems too aggressive or confusing, just walk away. There are other reputable companies out there.
Okay. Now, the guide doesn't just give criteria, it actually names names. Doug Young identified his top 3 picks for 2025. Can you give us the highlights for each? What made them stand out in his research?
Sure. His #1 recommendation is Augusta Precious Metals.
Augusta, what's their story?
The guide really emphasizes their focus on compliance. They apparently do voluntary independent audits. They've gotten accolades like Best Overall Gold IRA Company from Money Magazine, 2 years running, 23 and 24, and Most Transparent Pricing from Investopedia.
Those are big names.
They are. They also have top ratings, A+ from BBB, AAA for BCA. The guide highlights some perks, too. A free gold welcome gift. They claim the highest buyback guarantee, a satisfaction guarantee, 7-day money-back guarantee, even potentially 0 IRA fees for up to 10 years.
0 fees for 10 years. How?
Usually tied to the initial investment size, but it's a significant potential benefit mentioned. They also do educational web conferences with a Harvard-trained economist, which is pretty unique.
Interesting.
Plus endorsements from people like Ben Ferguson and Judge Jeanine Pirro, and they offer lifetime account support. But maybe the most striking thing the guide points out, 0 complaints ever filed against them with the BBB or BCA.
0 complaints in their entire history.
That's what the guide states, which is pretty remarkable in the financial services world.
Wow. Okay, that's a strong case for Augusta. What about the second pick, Goldco?
For Goldco, the guide highlights their extensive educational resources. They really focus on teaching clients. And they have a reputation for excellent kind of personalized client support.
But how long have they been around?
Since 2006, so they're well established. And apparently, a huge chunk of their business now, like 80%, is precious metals IRAs. They get high customer ratings, lots of positive reviews, recognized as a top company by various review sites.
What else stands out?
Their process is described as simplified, hassle-free. They apparently handle a lot of the paperwork and deal with third parties for you. And they offer incentives, too, like free silver, up to 10% of your investment, depending on the amount.
Free silver is nice. Any downsides mentioned?
Well, while they also have the top A+ AAA ratings and 5-star reviews, the guide does note they have had some complaints closed with the BBB and BCA over the last few years.
Yeah.
Unlike Augusta 0.
Okay, so still highly rated, but not quite the perfect complaint record. Got it. And the third one, American Hartford Gold.
American Hartford Gold. They're noted for growing really fast since they started in 2015. The guide praises their commitment to customer service and satisfaction, high Trustpilot ratings, lots of 5-star reviews.
How do they handle issues?
Apparently, they're very proactive in addressing complaints. The guide mentions that their top executives get involved personally to resolve client concerns, which is a good sign.
What about their process?
Described as easy and secure, they offer free, insured track shipping for metal purchases, and they have a buyback program that doesn't charge liquidation fees. They also focus only on precious metals and precious metals IRAs, no other distractions.
Specialization again, ratings, and complaints.
Similar to Goldco Top A plus AAA ratings, 5 stars on TrustLink. But again, the guide mentions they have had some complaints closed with the BBB and BCA recently.
So it sounds like, according to Doug Young, all three are strong contenders, but Augusta stands out, particularly on that complaint history metric.
Precisely. The ratings comparison table in the guide shows all three hitting the top marks, A plus, AAA, 5 stars. But that complaints comparison is where you see the difference.
Yeah.
Augusta with 0 on BBB-BCA, while Goldco and American Hartford Gold have had some recent closed complaints noted.
Okay, so as we start to wrap this up, let's boil it down. What are the absolute key takeaways from Doug Young's analysis that listeners should really hold on to?
I think it boils down to a few core points. One, precious metals can offer real security and diversification for a retirement portfolio. They have unique characteristics.
Okay.
Two, precious metals IRAs give you a way to hold those physical assets with tax advantages. That's a powerful combination.
Right.
Three, choosing the right provider is absolutely critical. It's not just about low fees. It's about expertise, transparency, service, and trustworthiness. That partnership matters.
Don't just pick the first one you see an ad for.
Definitely not. Four, the rollover or transfer process should be smooth if you're with a good company. And 5, you absolutely must understand and follow the IRS rules. Storage, purity, contributions, distributions. Get those wrong, and you could face penalties.
Okay. So let's quickly recap the potential benefits for our listeners considering this. You're looking at potentially diversifying your savings, spreading risk, holding a tangible asset that might hedge against inflation or economic bumps.
Right, that safe haven potential.
And getting significant tax breaks, whether you go traditional or Roth.
Those are the main draws, yes. But, as Doug Young really stresses in the guide, this isn't a decision to take lightly. It's a big financial move.
Do your homework.
Absolutely. Do thorough research. Compare providers carefully based on those criteria we discussed. Make sure the one you choose really aligns with your financial goals, your comfort level with risk, your values. Don't let anyone pressure you. Feel completely comfortable and informed.
Sound advice. And on that note, here's a final thought to chew on, kind of inspired by Doug Young's wrap-up in the guide. He strongly implies you should look closely at why his top pick, Augusta Precious Metals, seems to stand out so consistently based on his criteria. So as you're weighing your options, maybe dig a bit deeper. Compare Augusta's specific strengths, 0 complaints, the educational focus, the transparency awards against the factors that matter most to you, and see how they stack up against other companies you might consider.
It's about finding that best fit for your own long-term security.
Exactly. It's retirement after all. Thanks for joining us for this deep dive.